We are less than 2 weeks away from that April 15th tax deadline, and millions of taxpayers still have yet to file their taxes. Joining us live for some last-minute tax tips is federal tax practitioner David Selig. Good morning, sir.
Hey, thanks for having me. It's a real pleasure. Texas is my adopted state. I spent 3 amazing summers there as a boy.
Well, we love to hear that. Texas is a great state indeed. So we appreciate you and we appreciate your time this morning. David, talk to us about some key tax law changes and adjustments that you want people to know about this tax season as they file those taxes.
Okay, well, here, let me address a couple of things right now that are probably going to affect the biggest group of people that you have who are watching. If you have not contributed to your 401k or your IRA, you have until April 15th to do so. That's really a great idea, irrespective of if you have a Roth or a traditional. And if you want to get involved in a self-directed IRA, you don't have to transfer everything. You can do a partial transfer. So you can actually take a portion of your IRA or 401k and invest in real estate or precious metals or whatever you're so inclined to put your money into. That's a really important issue. A lot of people overlook. They feel they missed the year and it's too late. They'll do it again next year. You still have time. The other thing is if you have rental real estate, whether it's residential or commercial property, you should speak to your CPA or your accountant and find out if you're segregating your costs. A lot of people mistakenly just depreciate over 27 and a half years or 30 years, and they're leaving a lot of money on the table. In other words, you can depreciate everything inside your building and outside your fixtures, appliances, hot water heaters in a much shorter window of time. And by not doing so, you're leaving a lot of money on the table and you're depriving yourself of the opportunity to leverage and buy even more real estate. Interestingly enough, you can take residential property and roll that into a self-directed IRA as well. A lot of people are not aware of that. As long as you're not living in it, if it's a rental property, whether it's commercial or residential, you can put it in an IRA or a 401k, and it might be a very good opportunity for you.
Yeah, that's all really good information, especially about that IRA. I was interested personally about that. Talk to us about some tips for tax filers who might have started a side gig, maybe bought a house or even tied the knot.
Absolutely. Pretty much everything you use to generate income is an ordinary and necessary expense under IRC Section 162. Just keep decent records. You're not being audited. You're just claiming it. Whether you're filing a Schedule C or not, keep good records because these are deductible expenses, whether it's a cell phone, a post office box. If you're going to use your vehicle for business purposes, get a little diary and keep track just in case you get audited. A lot of people, they miss an awful lot of expenses because they just don't think about it. But the reality is every dollar you save is a big earning. Okay, it's either going to go to your Uncle Sam or to you. So decide in your own favor.
Speaking of saving, explain to us Savers Credit and how it can help taxpayers offset the cost of saving for retirement.
Sure. That's only going to apply to certain people. There's very strict income limits. But if you invest in your IRA, you may be entitled to deduct up to 50% of that contribution off your earnings. And that's also a good incentive. You see, the government wants us to save for the future. And that's why they give us these tax advantages. And this is an extra benefit for people who might not otherwise have done so.
For people looking for that extension, what do they have to do?
File before the 15th or on the 15th. Don't blow the deadline. You'll get an automatic 6 months. If you don't know how to do it yourself, go to a tax return preparer, H&R Block, or what have you. Tell them you need to file an extension. Give the information and they will do it for you. In the worst case scenario, you can do it on paper. I don't recommend you do so because the IRS is very backed up and you might end up in the great abyss somewhere.
Right, in limbo. Well, we so much appreciate your time, and those, of course, are great resources for folks looking for a little extra guidance. David, thank you so much for coming on the show this morning.
Thank you, and God bless Texas.
We do appreciate it. Thank you.